Hello everyone, welcome to Student Fund Manager, and it's amazing to have all of you here with me today. I am Sardar, and in this video I am going to discuss about the fund performance review since 22nd September. So since this is our first fund performance review, instead of doing the weekly review, I have decided to stretch it back all the way to 22nd. And after this, whatever we are going to do, we are going to do it on a weekly basis. So let's get started. So as you can see, I have named our investment group as Sardar Investment Group. Well, this is because the majority of the holdings are owned by our family and I am managing the fund. So that makes it clear. And we have three portfolios in this, but only two portfolios are active. Portfolio number A02 and portfolio number A03. And you can see the current market value of these portfolios individually, as well as the gains or losses that they have suffered, and both are in losses. Fortunately, most of this is because of high brokerage charges. So anyway, when we see this in a consolidated format, that is SIG assets under management, we can see that we are managing total assets worth 50,730.86 rupees, and currently we are having unrealized losses of 1269.14 rupees, and the period of evaluation is from 22nd September to 14th October. And when we look at the holdings, we can see that the highest amount has been allocated to SBI shares, which is around 29%, and 25% is in ITC, which we have acquired for an average of 343.56 rupees. And this is followed by Larsen and Toubro, then Navi Finance N1 bonds, and Titan Company shares with 5%. So change in holdings on 13th October, we have purchased Titan shares, only one Titan share actually, for rupees 2598.45. But the cost of acquisition is 2630.66. This is because of brokerage charges. And when we consider the PL from intraday positions, we have gained a profit of 42 rupees in this week. And coming to returns explanation, we can see that SBI has performed the worst in this period, whereas Titan has performed the best. However, we had purchased SBI at a time when the market was already falling, and because of this, the returns have dragged down quite a bit. And we have only recently purchased Titan in a good market. As a result, it is in positive. And the decision, as you can see, is hold on all the assets. This is because we have only recently invested in these shares, and the price fluctuation doesn't really uh, change the valuation for these shares, as I have a particular value for each of these shares and I have a strong reason for setting those particular values. As a result, right now my decision is hold on all of these shares, and maybe I will be investing in new shares. uh, I will be doing it with caution since the market is very volatile, but right now we are not looking to sell anything. And when we come to current valuation, we can see that the current market value for equities is around 38,733.15 rupees. For bonds, it is 9,980 rupees. And cash and equivalents, we have 2,017.71 rupees. And the total assets we are managing is 50,730.86 rupees. And when we compare against benchmark, we can see that we have faced a negative return of minus 2.44%, whereas Nifty has faced a negative return of minus 2.41%, which is slightly better by 0.03% compared to our portfolio. However, if we take a look, we can see that the brokerage and charges that we have paid on this fund is 180.41 rupees. So when we adjust for that, we can see that we have faced a negative return of minus 2.09 on our stocks, whereas Nifty has faced minus 2.41%. So we have actually performed better by 0.35% over Nifty 50. However, this is not significant, and we can actually reap the benefit of our allocation from the next periods, since when we are only holding stocks, we won't have to incur brokerage charges on that basis. So coming to shareholding and entry and exit decisions, right now, whatever investors we have, we do not look for any more investment or divestment at the moment, and the investor sentiment is moderate. They're kind of happy with the returns that they're facing. However, things could be better, and my recommendations would be, I would be considering following things, such as the volatile global outlook because of the war and energy crisis, and more issues are popping up every day. So it is a very volatile market. We cannot say for sure where it will be heading, because a single news can change the direction of the market. So for now, I will be watching the main global indices such as S&P 500, FTSE, and things like that to figure out where the markets are heading. And any investment that I make, especially in equity and derivatives, are going to be with extreme caution, since our asset allocation in equity is already pretty high, around 80%. And I may be looking to increase my allocation in bonds. So during this period, I will be researching on some good corporate bonds to invest in. And currently, I am looking at put options to hedge my portfolio in case of any sudden downturn in the market. So only after significant consideration, I will be making that move, and we can see more on the development in the next video. And as for our research schedule goes, I will be researching next on Infosys corporate bonds, HDFC Bank, and the overall banking sector in India. And this brings to conclusion our report. Also, apart from these reports, I would like to share with you the news that I have enrolled myself in NISM. And apart from this, I would also like to let you know that I have enrolled myself in NISM 22 Fixed Income Securities Certification Examination. And my exam is on Saturday from 2 p.m. So wish me luck, and I will see you in a day or two. Take care and happy trading. Thank you for watching my video.